Here we have the 4-hour price chart for NIO Incorporated, stock ticker NIO. As we can see here, the stock continues to trade lower, and we are sort of forcing new lows within this broader context that does suggest continued downside trade momentum. Overall, we have posted lows that come in now at $3.63. This is a fairly significant price level because it does exceed the $3.66, which was posted during the Monday, August 5 trading session. In addition to that, we can see that it comes into very close proximity with the earlier price lows that we've been watching, which currently come in at $3.61. Of course, this prior price low was posted during the April 22nd trading session, and it does mark the potential reversal zone that we have been watching for this stock. If we zoom in a bit more closely, we can see that near-term highs now rest at roughly $4.60. And if we were to break back above this level, this would be a very critical event because this would then signal the end of this prior downtrend and the descending triangle pattern that we've been watching for some period of time. In addition to that, a move like this would break through the 100-period exponential moving average on the 4-hour price charts. Moving down to the hourly time frame, we can get a closer look at what exactly is happening during this most recent move lower. Specifically, we can see the downtrend occurring here. Overall, this is a significant move because it has forced us through prior support levels, and it does call into question the possibility that the stock had broken above its prior descending trend line. Additionally, we can see that the relative strength index is currently showing a negative reading, and this does suggest that now downside momentum is favoring the stock. As things currently stand, we would need to see a break above resistance levels, which come in currently at $3.95. Of course, this would be a significant price move because, as we can see here, there is currently a price gap that exists right near this area. If we were to break above this $3.95 mark, this would suggest that we would need to fill the price gap to the top side. Ultimately, a move like this would break us back above the $4 mark. Additionally, a move like this would also break us above the 20 and 50 period exponential moving averages on the hourly chart. So in other words, this would break us above the 20-hour exponential moving average and the 50-hour exponential moving average. As we can see, a break like this would target prior range highs, which came in during the August 2nd trading session. Specifically, this posted at $4.14, and this could now contain price action to the downside. However, a break above here would be a very bullish event because it would suggest that a retest of the descending triangle pattern would need to occur once again. If we move down to the 30-minute price chart, one interesting factor that becomes apparent here is the fact that we can see that trend momentum to the downside is starting to decline, or at least progress in a less aggressive rate. Essentially, what this suggests is that the shorter term timeframes are pointing to a reversal, even though some of these signals might not be as apparent on the longer term timeframes. In many cases, day trading moves like this do act as a precursor for longer term trend reversals. When we're dealing with a stock like NIO, longer-term trend reversals are really the most important factor in these types of positions. As we can see here, the stock has been under major selling pressure ever since the prior price highs were posted. Specifically, these price highs came in at $9.57, and these mark the highs from the December 28, 2023 trading session. In the declining moves that unfolded from here, the share price valuation lost more than half of its trading value. Moreover, what ultimately resulted here was a sideways consolidation pattern, which did suggest that range levels were now forming at lower levels. To define these levels, we currently have $3.60 to the downside, $6.10 to the top side. Specifically, this range top comes in during the May 16 trading session, which is the area that currently works as the precursor to the ultimate declines that followed. From a longer-term perspective, what we really need to see occur here is a price break back above the $6 mark. Specifically, there are two reasons I mentioned this level. One comes from the fact that we are seeing the 200-period exponential moving average come into contact with this area. Additionally, we have this prior price high, which came in during the May 15 trading session. Given the fact that these two price zones match up quite well, this becomes a much more critical resistance level going forward. In my view, it is really this $6 mark, which is most likely to unlock gains to the top side from here. However, significant price failures at this level would suggest further downside moves would be coming and that a possible break below prior support zones could be imminent. Overall, in my view, the dominant price structure still maintains this fact and centers around this descending triangle pattern that we've been watching. On several occasions, we have seen this level break to the top side, but the resulting price moves lower suggest that these moves were ultimately false breakouts to the top side. Fortunately, the good news is that several false breakouts are unlikely to occur in succession with one another. In other words, if we continue to see forceful breaks to the top side, this downward sloping trend line is likely to give way at some point in the future. At this stage, it really does seem to be a matter of time before this ultimate price pattern becomes invalidated and a price breach to the top side becomes apparent. To some extent, negating this view is the fact that we do have a negative momentum reading in the relative strength index if we're looking at the 4-hour time frame. As I said previously, there are other indications in the shorter term timeframes which do suggest that reversal patterns are imminent. In addition to this, we can see that the relative strength index is starting to roll over out of oversold territory, and this does suggest that we might have found a bottom currently in this stock, roughly near this 360 support zone. If this assessment is true, this would suggest that current price levels mark an excellent buy zone for anyone that's interested in getting long this stock. Other factors to consider would be price movements in the broader market and within the technology sector as a whole. If we do start to see declines in the S&P 500 or the NASDAQ, these are factors that could weigh on share prices going forward. Other than that, I don't see specific reasons to believe from the fundamental basis that this stock is likely to continue trading much lower from here. Finally, I think it's a good idea to pull out here to the weekly time frame because it can sometimes be difficult to get caught up into the shorter term price movements that are accompanied with stocks like NIO. Specifically, I do know that there are many people that have been long this stock for quite some time and are looking for much longer turnaround reversal points for this stock. Anybody that's trading this stock on a longer term time frame should also remain cognizant of prior resistance levels which come in above 1650. Specifically, this would be the price zone that was established during the July 31st, 2023 trading session. Interestingly, this level also coincides almost perfectly with the 200-week and 100-week exponential moving averages on this time frame. From there, what we would be looking at would be a potential test of the $23 level, which is a roughly double top resistance zone, which came in during the September 2022 trading sessions. This double top area can be found here. From there, we would have to go back a bit further to find the next levels of resistance. Currently, the levels that I would be watching come in during the November 2021 trading sessions. Specifically, this price zone posted highs of 44.27 during that month. Of course, these price zones are quite a ways away from here, but these are potential upside targets for the stock going forward. Currently, we do need to break out of our near-term descending triangle pattern first before we can start to bet on a reversal into these topside directions. However, broadly speaking, what I'm looking for in this stock is a large amount of risk to reward ratio return that is based on a small level of risk and a much larger return metric for NIO share prices going forward. Here's the current market update for NIO Incorporated, stock ticker NIO. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.